Tech stocks slammed as the strong dollar bites hard. Economic conditions making it even more risky for companies like Facebook parent company Meta and Google parent company Alphabet that are seeing hits to their advertising businesses, especially after privacy pushes from Apple, not to mention a wind down in some of that marketing spending right now from other companies. For more, let's bring in Dan Ives, Wedbush Managing Director and Senior Equity Analyst. Great to kick off the week with you, Dan. First and foremost, really in focus right now, even before we start this week's trading, is the FX headwinds that are going to be persistent here in the near term. You know, exactly what type of impact would you expect that to really kind of press upon some companies?
Yeah, this is probably going to be about another 200 to 300 bip headwind for tech. And, you know, I think you'll see a lot of that come out in terms of 3Q earnings season. Obviously, for large cap tech, it's a headwind, but I'd also say investors have basically factored that in here. I mean, I think at these prices, that's already expectations. It's about what non-FX demand ultimately looks like and what type of numbers cuts we're going to see. I think a lot of that's already started to get baked into these stocks.
Hey, Dan, I caught up with Slack's founder, Stuart Butterfield, at Dreamforce last week. Take a listen. I want to get your reaction on the other side. We talked about tech valuations. Here's what he said.
The multiples have probably come down to something that looks pretty reasonable. A lot of, I think the average even for software across the board is something like 5x forward revenue, which is, compared to, I don't even know what the average was, 18 or 20x or something like that at the peak. I think the open question for investors is still, do we see a change in demand and therefore an actual change in performance? Because the multiples are probably about good. And if we collectively determine that we're not going to see a real decrease in demand, we're not going to see a real decrease in economic growth, then I think we have a lot of upside from here.
Dan, when you talk to clients right now, do you get the sense they're willing to come in here and start nibbling on these discounted valuations? And then within your coverage universe, are there any screaming buys that you're looking at from a valuation perspective?
Yeah, look, Brian, I think it's as most negative as I've seen tech going back to 2009. From an institutional investor perspective, in terms of appetite and what we're seeing with this risk off, and I just go back to, I think we're starting to see nibbling. I think there's continued fears where every time you buy the rally here, it continues to be disappointed. I think specifically names Apple, Microsoft, I think Salesforce at these valuations, I think cybersecurity. Names like Palo Alto, even down the spectrum from a valuation like a Checkpoint, that's where you're starting to see appetite, as we go into 3Q, 4Q. But no doubt, I mean, this right now is just a dark time for tech. And I think investors continue to just be white knuckle given what we're seeing in the backdrop.
It's probably also fair to recognize here that Slack was an acquisition that Salesforce made, of course, a $27-ish billion acquisition. And in this environment, hard to see exactly where some of those acquisition opportunities for smaller companies that perhaps may not go into the public markets by themselves as a standalone, where we might see some of that deal making take place, and how institutional investors like yourselves would also be watching over those decisions that be made and that capital that goes out the door either in stock or in cash at this point in time from some of those major tech companies that have a propensity to acquire in order to grow.
Yeah, and look, I mean, you go back to what did Salesforce actually pay for Slack, right? I mean, I think many investors in Salesforce wish they bought them today rather than when they did that multiple. You saw Adobe, when they after Figma in terms of what they paid on the $20 billion, stock got crushed there. So I think investors, they want to see M&A, but you want to see digestible valuations because I think that's sort of going to be the balancing act where we're going to see a lot of strategic as well as financial M&A within tech. And I would just take a step back. I mean, 22 years doing this. In recessionary type environments where it's very easy to yell fire in a crowded theater, in tech, those have been the best opportunities if you have a horizon 12, 18 months down the road. And I think we're starting to get to those points right now where, it's reminding me of 01, 09 in terms of sentiment in tech. And, I think fundamentally, especially software, cybersecurity, names like Apple, where demand continues to be ahead of iPhone 13, I think bar's worse than the bite. And that's just important as we go into 3Q.
Dan, you've been doing this for 22 years?
22 years, my 22nd year.
Time flies when you're having fun. Let's go back onto Apple because I look to you as a little bit of an Apple whisperer. Now, if the market is pricing in a mild recession or something worse, How does that impact iPhone demand this holiday season and into next year?
Look, no doubt in terms of the ultimate demand, you'll see around the edges that it will start to come up. But I can tell you, Brian, I mean, coming out of the gates, iPhone 14 specifically Pro looks like 85, 90% in terms of the mix. That's strong for ASPs, and that's trending what I believe 8 to 10% ahead of iPhone 13. We can clearly see demand, start to taper here, but at least so far, I think supply is more the issue than demand. And I think what's factored into Apple, you're factoring in that you're going to have a 5 to 7% numbers cut. Well, I just don't believe you see it based on what we see today. And I think that continues to be the tug of war between the bulls and the bears, especially for a name like Apple, where obviously that's going to take the market up and as well as down on both sides.
All right, we'll leave it there. Dan Ives, Wedbush, Managing Director and Senior Equity Analyst. Always good to see you. Thanks for hopping on. We appreciate it.
Thank you.